Greetings, members one and all of the Salivation Nation. The silver accumulation phase is now ahead of Basel III and price explosion, according to a key chief strategist for precious metals. Let's explore. It is late in the Friday afternoon, and we are looking at the prices that took a slight hit today on the back of two fairly substantial drops, bringing gold down to well under $1,800 an ounce and is now at $1,764.70 as of the recording of this video, and silver is now back down below $26 an ounce. The platinum group metals have suffered as well. Let's take a look at this article from FX Empire, and the title says it all. Wall Street smart money is accumulating physical silver. That's physical silver ahead of new Basel III regulations and price explosion to $44 an ounce. Earlier in the day, you saw a video where I talked about how gold ETFs will be suffering, according to a report from Metals Focus, and apparently silver is as well, according to the author of this piece. It has a subheadline that says, recently gold and silver have somewhat stalled. I guess that's probably the understatement of the week, after a fairly solid upside price trend in April and May of 2021. And this is reported by Chris Vermeulen. That name sounds familiar to me. Yes, everybody knows who he is. I actually had the distinct honor to interview Chris Vermeulen and get some technical analysis from him. He is a guy that likes to remove emotion from everything. Not me. I'm a very emotional guy. Some people think I'm crazy, but I actually do disagree with Mr. Vermeulen about that. To me, actually, emotion plays a huge part in the movement of prices daily. But he likes to remove it from his analysis. And you know what? But if you do take that out of it, I believe there are some very valid theories that he has here. And he knows better than I do. He's a lot smarter than I am. But recently, gold and silver have somewhat stalled after a fairly solid upside price trend back in April and May of 2021. And that was the heart of the silver squeeze movement. Looking at the long-term weekly silver chart, we believe silver is ready to pounce with a big move higher. The second half of 2021 will welcome Basel III, likely. It's not for sure as to whether these rules will take place at that time on June the 27th, or if they will be postponed, some of these rules, until January of 2022. I talked about that in a prior video, which kind of forecast that it may not have the dramatic effect that some think it will. And there is also a renewed focus by the U.S. Federal Reserve and global central banks working to contain inflationary aspects of the recovering global economy while also attempting to support continued growth objectives. Chris believes that precious metals, in particular silver, have shown a very unique accumulation phase over the past 12 plus months that may lead to a big upside breakout rally when it breaches the $28.50 level. I actually agree with him there on both fronts. First, it's got to reach that $28.50 level, and I think that's not out of the realm of possibility. And by the way, I'm standing by my prediction of silver touching at least somewhere for a very short time, at the very least, at $30 to $35 an ounce sometime this year. It may pull back, but I'm sticking to it, even though we're now seeing silver at almost $10 cheaper, $25 and some odd cents. Silver's waiting for the opportune moment to pounce, and Chris is asking if we're ready. The weekly silver futures chart highlights the on-balance volume accumulation phase, as well as our price cycle analysis suggesting that silver is stalling just below resistance near $28.50. His team and himself believes the new upward cycle phase, in addition to the massive accumulation taking phase, suggests that silver is currently lying in wait, ready to pounce on a big upward price trend once the $28.50 level is breached. Well, it's not only just lying in wait. I believe it's taking a little bit of a nap now because it's down fairly sharply on the week. All the models that he has, and this is important because he's looking at this from his technicaltraders.com website. He has really some very powerful insights that he has based off of data, and that is the key. Is he looks at these patterns and analyzes them from a very technical aspect, and he's suggesting a $40 to $44 upside target is real, according to his proprietary adaptive dynamic learning model. And it suggests a continued bullish price trend is likely on the monthly silver chart shown here, that a peak is likely near $40 to $44 near December of 2021. Very important. Let's see if this bears itself out. Now, where I disagree with him is not so much on his dynamic learning model, but it's the emotional aspect of it that could come into play that could either hit it or make it even worse, make it even higher. One way or the other, I think emotion and psychology in the markets is a very real thing, and that's the part where I kind of differ from Mr. Vermeulen on this, but we'll see how it plays out. The bullish price dynamic is based on the ADL's ability to map out unique price and technical setups in the past, and then align those unique price DNA markers with current price setups. What may happen over the course of the next few weeks is that silver may continue to attempt to consolidate below $28.50 as the markets react to the FOMC announcements and other market facets. And that reaction, by the way, is emotion. Once the markets digest the real factors related to inflationary concerns, and that is the thing they're not considering right now, which is why they're reacting emotionally, because they're not considering these real factors. What the U.S. Fed and global central banks need to do is to address these concerns and the future expectations related to forward monetary policies and expectations. Personally, he believes silver will move above $28.50 sometime in July or shortly afterwards, and begin to move dramatically higher, targeting $40 or higher. Now, if past is any indication of the future and the present, well, around June into July, we do tend to see dips. But remember what happened last year. We saw silver hit that $25 level. I remember reporting on it, and it was quite a big deal to hit $25. Well, we're back there again. So we've not really lost much ground year on year. We're just back treading slightly here, but we'll see how it plays out. But this is discouraging, these price movements, considering where we're at. But we'll find out, and we'll see. So his team believes that the end of 2021 and nearly all of the next 2 to 3 years will be full of incredibly big price trends for traders to take advantage of. The setup in silver suggests that we are only starting a multi-year bullish price rally phase in precious metals, very similar to the 2003 to 2007 rally in gold and silver. If you have followed precious metals long enough, you understand the biggest moves in gold and silver happen after the 2006-2007 stock market peak. That means that we are just starting to see an incredible opportunity in the U.S. stock market and precious metals related to volatility, trends, and price rotations. Now is the time you should start preparing for what is to come and learn how to take advantage of these incredible opportunities. Now, keep in mind, the last 5 or so trading sessions, the Dow has been down, and it took a pretty big hit today as well. It's been kind of nuts. Look at here. It's down 533 points as of the recording of this video. The S&P is down 55, over 55, and the NASDAQ is down almost 131. And so they have this strategy that they've got over there at their newsletter at technicaltraders.com. for Christopher Mullen. And so those of you who are interested, hey, check it out. He's a smart guy. But there are some areas where we slightly disagree, but it is fascinating to see. This is quite a bold prediction. We'll see what happens, and it'll be very interesting to see how it plays out. So there you have it. Let me know what your thoughts are in the comment section below. Regardless of whether who's right or how this is going to play out, one thing is for sure, the fundamentals for gold and silver have not changed, and we will continue to accumulate as we can based off of our own understanding of the precious metals. And I believe if we do it utilizing a method that I outlined in a previous video called smart dollar cost averaging, I believe that is the best way to accumulate. And this time, when prices are lower, even though some of the premiums are still very, very high, you can still take advantage and be able to lower your dollar cost average by buying on the dips. Although I would not advise you to do that going into debt or paying or charging it to a credit card that you can't pay off within an amount of time that doesn't accumulate interest. So there doesn't accumulate interest, that you will essentially be shooting yourself in the back if you try to purchase silver at that price point. But see how it plays out. It's a very interesting time as we end the week with the movement of prices where they're at, and they're down. And so this gives us a whole weekend to think about purchases that you may consider making over the weekend. Fascinating times we live in for sure, with the Federal Reserve printing money like it's going completely out of style, printing our way out of money troubles, which we know leads to just more bad news. We've got supply chains that are still recovering, bottlenecks. We've got inflation. We've got more spending proposed by Congress, potential of a $6 trillion package that the Democrats may go it at alone. You've got other situations that are at hand that are threats, geopolitical threats to the economy. We'll see how it all plays out. Gold and silver, I believe, they're the ultimate form of money that have survived all of the crap that's going on today. Let me know your thoughts in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.